let's look at DXY on monthly time frame. The idea behind this is that we have EU, AU, GU, UJ, UCAD on lockdown, and we are yet to find out which bond yield go in the opposite direction that aligns with the sentiment of the longer trend. For GU, we are looking for a sell opportunity. EU, we are looking for a sell opportunity. UJ, we are looking for a buy opportunity. AU, we are looking for a sell opportunity. But there is no alignment. So let's look at DXY, the dollar index, on a monthly time frame. See the drop, fabric structure, return price at that level. So we don't need that structure. Let's make it as minimal as possible. And in the most recent breakout without retest is at this level in a monthly time frame, and price sits exactly at that level, 99.190, and we have a trend line running from 2011. So this is our trend line. If you look critically, you will see this descending trend line acting as a dynamic support and paving way for price to dip into it. While we're looking at that, we have a potential buy floor 88. Now the issue is that Due to the current tariff, to see capital inflow into US economy, it has to do with the sentiment surrounding capital inflow right now. It's a little bit challenging. The atmosphere has to be balanced. Investors have to see that the system is normalized before you can begin to see inflow of capital. And with the current, tariff hit me and hit you strategy, if China decides to dump their US Treasury bonds completely, it's going to be a whole lot. It's going to be an issue. If they team up with Japan and they do so, it's going to be an issue. And that's why we continue to see the monthly candle is heavily bearish and it's going to continue dropping for the next one. Nobody can tell. But we have a support at 99.1131. That's support from July 2023. There is a support at July 2023. Let's zoom it closer so you can see it. So that could provide the foundation to for which we see a monthly rejection. Of course, this is a monthly candle, so we can see monthly rejection on that level. And if you switch back to our line chart, you will see that has been the monthly support structure has been broken. So after breaking the monthly support structure, you can see there is no retest, but we can reject back just like we did here in the month of July. So price reject in July, price can also reject that. So before the month end, you might see it reject because when you look closer, you will see that the most recent breakout of structure and the most high is at this level, and the price is at that level, and also coinciding with 2023 rejection level, indicating that dollar is about to reverse. And when you look at Sir Jerome Powell, head of Federal Reserve, pausing rate and his stance are hawkish despite rate remaining the same. It's also something to watch, and investors are pricing it and looking at it. And we have a strong fundamental coming up on, I think, Wednesday precisely. We have, uh, I think that should be flash manufacturing data and flash service data. Then shortly after that, I think we'll have home sales or something. So these are data we're expecting either on Wednesday. There are data we're expecting on Wednesday. So we look at what Federal Reserve is doing. The Federal Reserve monetary policy stance as at February, and when we look at what they have in April, is to keep federal fund rate steady. And they have done so by keeping it at 4.25 into 4.50%. So maintaining a pause in rate change since December 2024 is something investors are watching, and Fed adopting this cautious wait and see approach, awaiting more economic data before adjusting rate further. Sir Jerome Powell highlights concern about a tariff potentially increasing inflation temporarily where slowing economic growth and employment progress. Fed mandate is to make sure that employment is at maximum level and while maintaining the level of inflation to come below 2%. 2% is the inflation mandate. So these are things that we must consider, and policymakers are also expecting that rate might cut twice this year. Nobody knows, that's very uncertain. We'll continue to see on the wait and see approach before Federal Reserve will know whether to stay steady or to cut rate. And if you are to cut rate, by how many times? And Sir Jerome Powell is under intense pressure from President Trump to cut rate, and his job is being threatened. But I know he's a very firm policymaker, and he's not going to change his stance. And every decision made by Federal Reserve will be based on economic data prints. So data prints will determine what will be the next. So for now, we'll look at the flash manufacturing data print and flash service data prints. They are all PMI data. Then we look at home sales. Then all this will give Federal Reserve clue as to what to gather up and decide on what needs to do. So for DSY, I think it's at a reversal point. To be very honest, haven't broken from the monthly structure. The month hasn't ended yet, But if the month closes and we close below this structure, then we might still have a retest and price will continue to come down until we come to this ascending trend line. Or there is also a possibility that 1 or 2 day candle can also push price to come to this ascending trend line where we are going to have a buyback. And the structure is quite open, and as we can see it, let's clone this structure and take it to the roof and see what it does. And that gives us a clue about how market is well calibrated and see what that has given us. So the market is still bullish, moving in upward bullish channel, and a touch in this floor will technically trigger a tremendous dollar buy, and it might extend to the point that market might break out, come here, and return itself back and begin to trade back. So dollar is still bullish. Don't give up on US dollar. It's good that once in a while trade dynamics is changed. There is a strong trade imbalance, and there's abuse of trade relationship between one country and the other. I think somebody has to address it, and we are very happy that we have a president that will address this trade imbalance and very bad trade behavior among some countries, where you see ideas are copied without reciprocation, without any consequences, and without even any lawsuit. There are certain countries that you copy people's idea and nothing happens. You can't continue in a world like that. There has to be reciprocation, there has to be consequence when you know trade secret is being violated. So what is happening is part of the market, and I appreciate it, and I like what the president is doing. To be very honest with you, I'm very happy with what he's doing. There has to be reciprocation, there has to be trading balance checked properly, and the idea of pumping inferior goods and staging the system. I know it's going to come with a consequence, but I think at the moment what the president is doing is a good thing. I know a lot of people will not understand it, but if you're a trader, you will understand that what the president is doing is absolutely correct. Absolutely correct. I know a lot of people will not like it, but if you understand chart and you understand the market economics, you will know that he's doing the right thing. The world has to come to a point that everything is balanced properly. So this is what I see, and however, in this case, of course, America is the biggest consuming economy, so you need them. You can't. And when it comes to the idea of dumping U.S. bond, well, that's going to be the end of those who claim that they're going to work hard. They can't do that. They can't do that. That would be very, very impossible to do. It comes with a consequence. Dumping the U.S. bond. It comes with a very serious consequence, and we'll look at that and discuss some of the consequences of China trying to or attempting to dump a US bond, the consequences they will face. So we look at it and also discuss it, and have it in mind that they are not going to do so. They may reduce their bond value, their bond debt, they may reduce their bond holding. It is possible they reduce their bond holding up to 700 and something billion from 1 point something billion. They could continue to bet if they cannot dump. Dumping is impossible. It's impossible. So, and the majority of these capital flows are going into gold, and maybe possibly euro bond or maybe British bond. So these are things that are happening in the market. So there's change in trade dynamics, which is normal, and we expect that. So this is what we see. So from where the XY is at the moment, I think that that 99.13 level could provide a buying site, and it could be the opportunity that you know dollar needs, and if that becomes a reversal, then euro USD buying is paused, AED USD buying is paused, GBP USD buying is paused, USD JPY buying, I mean selling is paused. So that's what we see at the moment, and we look at it on a lower time frame, 4 hours, as a monthly time frame is very heavy for us. It doesn't give us a clear direction as to where market is going.